welcome back. In this section, we are diving into one of the most reliable financial instruments for building wealth, bonds. By the end of this session, you'll understand what bonds are, the types of bonds available in Kenya, how to invest in them, and the benefits and risks involved. Let's get started. What are bonds? A bond is essentially a loan you give to a government or a company in exchange for regular interest payments, plus the return of your initial investment, called the principal, at the end of the bond's term. Think of it this way: when the government or a business needs money to fund projects, they issue bonds. You, as the investor, buy these bonds, effectively becoming a lender. In return, they agree to pay you interest periodically, making bonds a reliable source of passive income. Bonds are popular because they are generally less risky than stocks, making them an excellent option for conservative or first-time investors. Types of bonds in Kenya. There are two main types of bonds you can invest in within Kenya. Treasury bonds. Treasury bonds are issued by the government of Kenya through the Central Bank of Kenya, CBK, to fund development projects. They are considered very low risk because they are backed by the government. Let's break them down further. Fixed coupon bonds. These offer a fixed interest rate paid semi-annually, making them predictable and reliable. Infrastructure bonds. These are tax-free bonds issued specifically to fund infrastructure projects like roads, water, and energy. Tax exemptions make them particularly attractive to investors. Zero-coupon bonds. Instead of receiving periodic interest, these bonds are sold at a discount and repay the full face value at maturity. Corporate bonds. Corporate bonds are issued by private companies to raise funds for their operations or expansion. They tend to offer higher interest rates than treasury bonds because they carry a slightly higher risk. However, well-established companies issuing bonds, like those listed on the Nairobi Securities Exchange, NSE, can still be a solid investment option. How to invest in bonds? Investing in bonds in Kenya is straightforward. Here's how you can get started. Treasury Mobile Direct, TMD. This is an easy and direct way to buy treasury bonds through the Central Bank of Kenya. All you need is a Central Depository System (CDS) account, which you can open for free with the CBK. Once your account is set up, you can bid for bonds using your mobile phone or online platform. Broker platforms. If you're looking to invest in corporate bonds or trade bonds on the secondary market, you'll need to work with a licensed broker. Brokers act as intermediaries and can guide you through the process from account setup to purchasing bonds on the NSE. Benefits of investing in bonds. Steady income. Bonds provide regular interest payments, offering a consistent cash flow. Low risk. Treasury bonds, in particular, are among the safest investments since they are backed by the government. Portfolio diversification. Bonds help balance the risk in your portfolio, especially if you're also investing in stocks. Tax advantages. Infrastructure bonds are tax-exempt, making them a cost-effective choice. Risks of investing in bonds. Of course, no investment is entirely risk-free. Here are some potential risks to be aware of. Interest rate risk. If interest rates rise, the value of your bond might decrease if you decide to sell it before maturity. Inflation risk. Over time, inflation can erode the purchasing power of your interest earnings. Credit risk. For corporate bonds, there's a risk that the company might default on its payments, although this is rare with reputable issuers. Instructor leans forward, speaking confidently. So there you have it, a comprehensive overview of bonds, the types available in Kenya, and how to invest in them. Bonds are an excellent starting point for anyone looking to earn steady returns while minimizing risk. Ready to explore more financial instruments? Let's head to the next section, where we'll discuss shares and how they can complement your investment strategy. See you there.